Stocks initially moved lower this morning and gold moved higher off of the uncertainty happening in the Eastern European sort of theater between Russia and Ukraine. Putin supposedly lowered the threshold for a nuclear strike in response to a broader range of conventional attacks, and Moscow said Ukraine had struck deep inside Russia with US-made long-range missiles. And initially this caused a slide in the US stock market, but at the time of recording this, things have bounced back pretty sharply. And same thing with the VIX. We saw a big spike in volatility, but that spike seems to have faded pretty quick. And in typical fashion, in response to geopolitical uncertainty, oil prices shot up and then have now sort of receded back. Same thing also, by the way, with gold, which was up 0.5%, or actually more than that, almost 1% plus this morning, and has given back a little bit of those gains here. And our daily check-in on Bitcoin as it continues to shoot higher is looking really good. In fact, we've got a nice start here to the day. I'm very curious to see if by end of day we can get a nice strong closure on the price of Bitcoin at all-time highs. That would be a really bullish looking price action chart in my view, and I think it's about time that I start trailing my stop loss further on this position. And I've mentioned this gratefully and excitedly so, that Bitcoin has become one of my biggest winning trades this year and kind of came out of nowhere. The price of Bitcoin has launched a stratospheric 33 or so % from my entry point, very quickly jumping up here. And my theory here with Bitcoin was, post-election, I thought we would see some nice risk-on moves, but boy, did we get one. And I think it doubled up quickly because not only did we get a risk-on move, but with the decisive Trump victory in the election, which is perceived as more of a pro-Bitcoin administration between him and Elon Musk, Bitcoin has just really taken off to the races. All I can do here with my trading strategy here is I like to trail stops, and these sorts of moves are the ones that really pay the bills for my trading account, because every once in a while you catch these really ginormous one-way movers, and if we can get a nice break and clean through the high, I'll be able to continue to trail stops and just follow this trend as long as possible. And we'll see where it takes us. Stocks are about flat here on the day, and yet Bitcoin is up another 2% here on the day. Just an incredible rally for the price of Bitcoin. And the Edgefinder's top setups watch list is a little bit light this week. Got some interesting ideas from the Nikkei, Pound Aussie, Kiwi Yen, Kiwi CAD, the dollar ZAR, and the Australian dollar against the Kiwi dollar. But you can see a lot of things are sort of stuck in neutral territory, which I think may be poised and waiting for some of the upcoming economic data in the future weeks. That being said, I want to keep an eye on gold, which is teetering around a -4, which is close to a bearish reading. If that gives me the confirmation, I may actually look for sell side opportunities. In fact, the Edgefinder score specifically for gold has actually been decreasing recently as this trend has started to develop to the downside. I'm curious though if we can get over the -5 or under the -5 threshold, which gives me a bearish rating. Just a reminder for those of you who are newer to the Edgefinder's functionality, it's looking at a wide arrangement of different key indicators, specifically economic data, sentiment data, and simple technical trends to try and decipher which direction most likely a chart may go next. And when we look at a list of items, we can actually go take a look at, for example, our gold scanner. If we take a look at the gold and silver scanner here and we populate this in, you can see we're sitting at a -4 rating on the price of gold. Now, this is still considered under neutral territory, but if we dive deeper into the red here, meaning we get -5 or lower, that is perceived as a bearish reading and confirmation from the Edgefinder, in which case I may actually look for short side opportunities in this market. Of course, as an Edgefinder user, you can also check the stock indices scanner, industrial commodities, Forex, bonds, and much more, all in the platform. And I should mention that if you have not taken advantage of our Black Friday sale, it's the biggest discount that we do all year long. And there's a promo code and link in the description down below if you're interested in taking advantage. It saves you hundreds of dollars on a price that is just one-time payment. So when you get access to the Edgefinder, you don't pay monthly, you don't have to pay annually, you pay one time, you get unlimited access to the tool, and you get all of the future updates for free with it. So don't miss out on our Black Friday discount. It is the biggest all year long, and you'll be kicking yourself if you miss it and you want it later. I'm telling you, we have thousands of traders all over the world using our tools, and we are very excited to see how far this tool goes and how expansive our team gets in terms of building things like this. I can tell you that if you've been watching my channel for a while from the sidelines and you've watched this tool develop over time, time, you've seen how far along it's come. We have a great team of people behind the scenes that manage this product, and we're excited to see how far it goes. So get your copy during the Black Friday sale. Don't hesitate. I'm telling you, the price will go up and you'll miss out on all the features. So there's a little bit of urgency to this. I'm telling you what, it is a sales pitch, but it's a great tool and I want you to check it out. So if you have not already and you have any questions, you can use the first link in the description down below to speak to a support member on our team. You can also sign up for payment installments if that's easier to you. If you'd like a payment plan, if the one-time price is too high for you, send us a DM on our website, a1trading.com, or using the first link in the description down below. And the dollar index seems like it's trying to actually roll over here. 107 seems to be where bears came in here a little bit heavier than before. I would not be surprised if this does turn into a little bit of maybe a week or two of pullback in the dollar index. In fact, I think it would actually be quite healthy. This thing has been just a straight shot to the upside, and I think a pullback perhaps to the 61.8% retracement zone would be a very, very healthy thing for this uptrend. Again, that would take us down to around 104.8, let's call it, on the DXY. I want to be clear, however, that I'm not necessarily saying that I'm bearish on the dollar. In fact, I remain pretty bullish on it. That being said, even when you're bullish on something, it is very fair to say, okay, hey, this thing may have gone a little bit far and maybe due for a corrective reload or a pullback in the context of what is still a strong trend. So when we break down charts like Euro USD, I think that there is room to go back and test some of these key levels on this chart and still maintain an overall longer term bearish trend. Pound dollar, same thing, 1.3 looks like an interesting level. And the dollar CAD, with higher than expected inflation out of Canada this morning, is pulling back. We'll see how far this pullback can go and if we can actually get down to some key levels of support like this 1.38. In fact, let me mark that as well. We got this 1.3825 level, let's call it, and this key level around 1.3760. The dollar yen is also mildly lower here today. There was a bit of a hiccup with that geopolitical headline that came out this morning, and yen pairs got a little bit lower here, which of course indicates yen strength. And then also gold's price jumped initially and has pulled back. I'm very curious on the price of gold to see how we react should we come up into this level of resistance, this 50% retracement. It does seem like I mentioned earlier, I lean a little bit on the bearish side of gold, but I'm waiting for that score on the Edgefinder to tip a little bit more to the sell side, to the bearish side of things, before I can find a setup myself. This 50% retracement looks interesting. So does the 61.8% retracement. I think that the risk to reward on a sell trade there, if I get the confirmations that I'm looking for on the Edgefinder, look pretty good to me in my trading style. That being said, I'll continue to monitor this one and see if I can find a setup. I mentioned at the beginning of this video that oil prices popped initially, but have receded a little bit here. They are at long-term lows here around $67 per barrel. That being said, I would not be surprised if next year we do continue to see some bearish pressure in the price of oil, as the Republican administration seems keen on pumping a lot of oil. And if, peace in the world improves to some capacity, that would also be a negative catalyst for the price of oil, simply because less war, less concern about supplies, etc. of oil could reduce the price of it. Not to mention the global supply production of oil is up and away, which I think continues to be a bearish catalyst, at least for the time being. Speaking of oil, we actually did a pretty in-depth conversation about China, oil, etc. with Ivan, who came on the live stream today. So if you missed that clip, I'll roll it back here for you. Remember, take advantage of our Black Friday sale if you have not already, and check out this clip. But in terms of the market's reaction to it today, you saw gold move higher a little bit here, oil prices higher by 0.7%. I don't know. I kind of think that oil prices, I'm hopeful that there is an improvement in that situation, and that perhaps sanctions and boycotts and tensions could be relieved, and that oil prices can actually stay down, not because of weak economy, but because of supply constraints being lifted. Do you agree on that sense in 2025? I lean that direction. I actually think and am hopeful that oil prices do continue to sort of stay muted to the downside. They may not slide way down, because then OPEC will get all up in arms about it. But I think that there's some downside for oil next year. Do you agree, or do you think oil prices actually could bottom out and go higher?
As there is so much to either side, and I might be wrong about this, but I saw a report this morning that said that there's going to be a lot of oversupply in the market. That production is higher than what they are reporting, so that means that price could go lower. Now, to be said and frank and everything else, we are at the same price since September. We have barely moved from 79 to 66.
Yep.
We are in a $30 range. Going forward, I believe so. China needs to get their things together. Europe needs to get their things together. America needs to get their things together. Saudi needs to get their things together, meaning stop producing so much. Then we can have higher prices. I believe with the lack of demand we see, the inflation across the Western world and the G7 countries we trade is lack of inflation means also lack of demand for oil, and that's, in my world, will weaken more than has anticipated so far. So a weaker oil is kind of what I see with that.
Yeah. No, I mean, right now, you brought up China. That's a really, really important point. The oil, well, we have to remember that in the global system, China's a massive exporter and manufacturer, but their economy's been really struggling the last few years. That will take some time to reverse, and it's taken some time already, right? It's been a long wait. A lot of people who have been holding their breath, trying to wait for China to reverse course and to have some stronger economic data, are still waiting. So, we'll see what happens. The stimulus out of China was a big booster to their stock market, but we've seen a lot of, and again, we're going to China because it has a big impact on oil prices, which have a big impact on everything else. So the Hang Seng Index had this ginormous jump, 36.5% gain, and then now seeing a 15% drop. I'm wondering if this is a buy or if you stand clear until there's further evidence that the Chinese stock market has bottomed. Because look at this thing. It's had a horrendous last few years. I mean, the top for the Chinese, the Hang Seng Index here, back in 2018. Meanwhile, stock markets around the world have been taking out their highs for a couple of years now, or for at least a year now.
But you also have to remind yourself, China is China with Xi Jinping, whatever that means. Everything is propped out on debt. Remember, what's it called, Evergrande or something in that direction?
Yep.
The real estate company. So it's a card that called card house that it can potentially fall, where you have weak demand for their products and services. And I have one guy that I talked to in China, and he says that production is all-time, for that company, all-time low. Like, it's never been worse.
Really?
The question is that for the entirety of China, or is that just one company? I don't know. But
well, you know what they say, typically when things are going really well, all boats rise in a rising tide, right? So if one company is feeling the worst ever, there's a good chance that it's shared by others in the same industry, the same sector, etc. So yeah, I mean, guys, China is a really big key factor for many markets that many of us watch closely. If you watch copper, if you watch oil, if you watch silver, gold, I mean, the Chinese economy is very, very important. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.